Hey there, everyone. Welcome back to our channel. If you're looking to dive into the world of real estate investing but don't know where to start, you're in the right place. Today, we're going to demystify a concept that can open the door to real estate investments for many: real estate syndication. So, grab your notebook and let's get started. But first, let me ask you a question. Have you ever wanted to invest in real estate but felt overwhelmed by the costs and risks involved? If so, you're definitely not alone. Many people dream of property investment but hesitate because of the seemingly high barriers. This is where real estate syndication comes into play. So, what exactly is real estate syndication? In simple terms, it's a partnership between multiple investors who pool their resources to invest in real estate. Think of it as a way to share the financial burden and risk of property ownership while also expanding your investment opportunities. Let's break it down further. A real estate syndication typically involves a syndicator or a sponsor, an individual or company that organizes the investment, and a group of passive investors who provide the capital. The syndicator is responsible for finding the property, managing it, and eventually selling it for a profit, while the passive investors contribute funds and share in the profits without having to actively manage the property. For example, let's say a syndicator identifies a 50-unit apartment complex up for sale at $5 million. They estimate that with a little renovation, they can increase the value of the property significantly. However, to purchase this complex, they need capital beyond what they have. So, they create a real estate syndication, bringing in 20 investors who each contribute $100,000. With the combined $2 million from investors, the syndicator can purchase the property, manage it, and eventually sell it for a profit. Another common scenario might involve investing in commercial properties, such as office buildings or retail centers. Let's say a syndicator finds a prime office space in a growing area that costs $10 million. They may seek out 40 investors to each contribute $250,000. Again, these investors benefit from shared risks and profits without the day-to-day responsibilities of managing the property. Now, you might be wondering about the benefits of this investment strategy. According to a report by the National Association of Real Estate Investment Trusts, the real estate market has historically delivered an average annual return of about 9 to 12%. By pooling resources in a syndication, investors can gain access to larger and potentially more lucrative deals than they could on their own. Moreover, real estate syndications often use leverage, meaning they finance a portion of the purchase through loans. This can amplify returns. For instance, if the property's value increases by 20% after renovations, the return on the invested capital can be significantly higher than if the investors had purchased a property individually. However, it's important to remember that, like any investment, there are risks involved. Returns are not guaranteed, and the success of the syndication largely depends on the expertise of the syndicator. If the syndicator fails to manage the property effectively or market conditions change, investors may not see the returns they hoped for. Additionally, real estate syndications are subject to legal regulations, especially regarding the solicitation of investors. Many syndications are structured under SEC regulations, requiring disclosures and adherence to specific guidelines to protect investors. It's crucial for potential investors to do their due diligence and understand the legal framework before jumping in. To wrap it all up, real estate syndication can be a fantastic way to invest in real estate without having to shoulder all the financial burden or management responsibilities alone. By pooling resources, investors can access larger properties and potentially yield higher returns. However, as with any investment, it's vital to understand the risks involved and conduct thorough research before committing your funds. If you found today's video helpful, don't forget to hit the like button and subscribe for more insights on real estate investing. And if you have any questions about real estate syndication or want to share your experiences, drop them in the comments below. Let's build a community of informed investors together. Thanks for watching, and see you in the next video.